Today, we're all talking about tokenization infrastructure and how we're enabling institutional adoption. The room is probably filling up right now, so I'm going to do a bit of preamble, talking about some recent reports that we've had from the likes of Standard Chartered. They recently estimated there will be 30 trillion of tokenized assets by 2034. Citibank predicts 5 trillion of tokenized digital securities by 2030. And even a more cautious report by McKinsey and Company, they've suggested a still huge 2 trillion worth of tokenized digital securities by 2030. We've got the likes of Goldman Sachs announcing 3 tokenization projects by the end of this year. And I think probably over the past 2-3 months, a lot has changed with Securitize and BlackRock's partnership really showing the power of on-chain capital markets, instant settlement and composability. The mood has changed, and I think it's really important to acknowledge that and the difference we're seeing. So today we've brought together leaders from 4 excellent companies that are all pushing tokenization from different perspectives as well. They're building infrastructure that's all vital. So we've got Bernardo Quintao from Backed, Head of Business Development. We've got Bob from INX, the VP of Capital Markets. We've got Colin Butler, Head of Institutional Capital at Polygon. And of course, Colin Cunningham, Head of Tokenization and Alliances at Chainlink, and also chairing the Tokenized Asset Coalition. So today, we're looking at a deep dive, a little bit more specific and nuanced in areas that will make tokenization adoption successful. We all know by now it's not as easy as just minting a token. There is regulation, there is regulatory engineering that has to take place, and all of it has to come together to create a better user experience, something that's better than what we have already. And for that, you need seamless infrastructure, which is where you 4 come in. So what are you all building right now? I want you guys to quickly talk about your companies if anyone in the call maybe isn't aware of what any of you do quite yet. So first I want to open the floor up to Bob and hear, what does INX do? What are you guys building?
Thanks, and hello to everyone listening and everyone who's tuned in. Thanks for joining. INX is now going on 7 years old. The first 3 years were spent just knocking at the door of the SEC saying we have a vision to bring tokenized assets to retail audiences globally and give them the protections that investors should be afforded, just like they have in traditional financial markets. And it took almost 3 years for the SEC to understand what this prospectus was that INX was putting in front of it, saying we wanted to raise capital in something that we were calling a security token offering, and that we wanted to allow investors from all over the world to own a piece of this opportunity. And the opportunity itself was to build a listing and trading ecosystem for digital assets. So we wanted to be kind of asset agnostic. We wanted to offer cryptocurrencies, security tokens, custody solutions, and all of what you'd expect when you log onto a wealth management platform, right? Your typical sort of ecosystem for investing and building your retirement portfolio. And this was the vision. The vision was, all of these platforms exist on traditional rails. We're headed into a blockchain-powered future. So let's be one of the pioneering companies to start taking these same services and putting them on chain, and of course bringing all of those benefits that come with that, whether it's efficiencies or more security, transparency. There's a long list that I'm sure most people have heard over and over. And ultimately, that's what we have now built. So upon getting that approval, we went and raised capital. We acquired businesses that had licenses. We acquired licenses directly, working with regulators in the United States. And today we're kind of armed with what I like to call a war chest of licenses that allow us to provide solutions, whether it's for cryptocurrencies, listing and trading, or whether it's security tokens, investing in primary offerings or security token offerings, distributing dividends to investors. So we've built that vision. We've unified the experience of whether it's cryptocurrencies or security tokens that the client is looking for. We've unified the experience into one user experience, one user interface, and cleaned it up as much as we can based on what we're able to do given the constraints of the current regulations. And now we've struck more and more partnerships, specifically one with Backed, and that just opens up doors to even more solutions that we can offer to reach more audiences that some of these solutions are more relevant to in emerging markets and so on. So it's been, I mean, that's a condensed view of 7 years, but it's been building and kind of growing all along. And now it's the partnerships that are key. And that's why I'm really excited to show, that we're sharing this panel with, the guys on here, because this is what's going to drive this space forward. It's the partnerships.
Yeah, excellent. I think you summed up the mission that INX is on very well. It's obviously been a long road for you, and yeah, having this war chest of licenses, as you guys covered, for whatever comes next in the evolution of capital markets. Let's go to Colin Cunningham next and speak a little bit about what Chainlink's doing to push tokenization infrastructure.
Yeah, I was going to say, I think it's probably best that I don't give the whole Chainlink story because it's been around quite some time, and there's some very DeFi components to what we do. So maybe just a little context. I joined Chainlink in February of this year. And so it's been 5 or 6 months. But as we all know, real world assets and tokenization has kind of taken the crypto market by storm, especially this year. And it's been a long time coming, as I know a lot of us have been working on this for a very long time. So it's quite exciting. But just for context on me, before Chainlink, I was at Centrifuge, which is a real world asset platform. And I would say the shift for me and where I look at the tokenization strategy that we're building here at Chainlink is I kind of think about it in 4 layers. I think about the market participants that sit here. I think about kind of the service platforms and providers that sit underneath that those market participants might use. Third, I think about the chains that are being built and continue to be built as kind of the underlying infrastructure. And then way at the bottom is Chainlink. And so from a tokenization perspective, we think about ourselves as kind of the plumbing and the platform that's going to enable data and also interoperability for the tokenization industry writ large. So I've gone a couple layers deeper into the stack, which has been a very different view, but a very exciting view. So, excuse me. So what we're focused on at Chainlink is trying to understand really two things as it comes to the kind of the crypto native ecosystem. Is one, what kind of data do we need to be bringing on chain for the industry writ large to enable tokenized assets to perform in a way that could mirror the way we think about crypto native assets? And let me just speak to that for a second. If you think about Bitcoin and Ethereum as assets, they were born on the blockchain. They've lived on the blockchain their whole life, and they continue to sit there. We know everything about those assets because of where they sit on chain. Real world assets have a very different problem when it comes to data. And so what we're trying to figure out at Chainlink is what are the data points that our decentralized Oracle network can serve to take all of the data that sits off chain where all of these assets were born, and how do we bring that data on chain in a way so that they can actually exist within these Web3 systems to enable programmability, composability, and ultimately utility. And so that's been a very exciting conversation, because whether the work that we've done with Backed, the work that we're doing with INX, the work that we're doing with Polygon, all of this, what we've found and sitting at that where we sit in the stack is that it really takes a complete ecosystem to come together. And so that's what calls like this are about. I think that's what partnerships like this are about, is how do we bring together all of those different layers of the stack, combine them and unite them. And for us at Chainlink, it's about the data that enables that, and then the interoperability between all these different pieces of the ecosystem, whether it be the participants using the services or the platforms or the chains, all of it has to come together cohesively. And so Chainlink serving as that glue on data and interoperability is where we really focus our efforts right now.
Yeah, I think that summed up very succinctly how Chainlink is like plugging into this tokenization infrastructure and the importance of how on earth we get all of this off-chain data on-chain and actually make these tokens more than just representations, but make them usable. And yeah, it's excellent to see this panel together talking about these partnerships. And I've already seen one comment here from Jason saying collaboration across industry is very exciting. And I think we need to see more of it because as the Web3 guys, we've got a lot of competition out there. And we want to make sure it doesn't always exist on private chains. We want to make sure it doesn't always just stay in a sandbox. We want to see interoperability and accessibility. That's the whole point of this. So further from that, I want to pass off to Bernardo, our own Bernardo from Backed, and speak about what we do at Backed.
Yeah, thanks, David. Good to see you again every day. So at Backed, we create tokens that are backed by securities. To put it another way, we issue tokenized securities, right? So for us, it's very important that when we offer a product, we offer something that is state of art, the best product possible that gives the most protection to investors, right? And we do that by also, as Bob was mentioning, by our own war chest of licenses and regulatory and compliant approaches. We have our main company in Switzerland. We follow the DLT Act, like the best blockchain law in the world, as I see. We have licenses on the Jersey Islands, and we're actually the first company to have a license to tokenize securities out of Jersey. And all of our tokens right now, they have prospectus in Liechtenstein. That makes our tokens retail grade, MiFID II compliant. So that's why Bob at INX can actually sell or trade those tokens publicly on INX for their retail users. And that's because we have this very solid, robust approach to our legal regulatory framework. And in that sense, we can tokenize any kind of securities. Right now we have treasuries, Euro bonds, Swiss bonds. We have equities from S&P 500 to Coinbase shares, Tesla, Nvidia stocks, and so on. And we plan to expand that to more and more tradable securities on chain. As a company that is specialist in tokenization, not only on the regulatory, on the product side, but also on the technology side, we are chain agnostic, connected to many blockchains already. Our tokens are integratable and they can be used on DeFi protocols such as Angle Money, Morpho, PWN now as well. We have built and started to offer these tokenization services as well for financial institutions that wants to explore tokenization, that wants to do that for their own clients or for products that they have internally. We actually can fast track the creation of tokenized securities for them. We've seen these happening already for a while. Many financial institutions, banks, family offices, asset managers exploring the space. Most of them still on a pilot, kind of sandbox way, trying to understand internally. And we are the next step, right? Once they want to move forward with something more publicly to the real live trading, we can help them, right? We've been leveraging on our partnerships with INX, Chainlink, Polygon, and other players in the space. We've traded more than $100 million already on our own products, And we're starting to roll out that for other financial institutions as well. So in short, that's what we do, and happy to share this space here with all of you.
Yeah, thanks, Bernardo. I think you summed up well what we do here. One thing I always try and put across to people when I say, what do we do at Backed? We're not creating necessarily tokenized securities. We're issuing securities that happen to use the blockchain as the ledger. And I think that's a key differentiation. We can already do this under European regulation. And I'm excited to see how that regulation will change across the entire world. Let's push on now to Colin Butler, and we'll get our final introduction done before we jump into some deeper discussions.
Thank you very much, David. Super excited to be here with all of you renowned folks in the industry. Polygon is a blockchain focused on scaling Ethereum, specifically using zero-knowledge technology, which we believe at this point Polygon has the lead in. And the vision there is for unlimited scalability and unified liquidity. And so what we're really focused on is working with everybody on this call to build the substrate of the how all this stuff is going to come into existence. We still need to build deep pools of liquidity. And so first and foremost, Polygon, I think, had an early lead because it has the second largest community outside of Ethereum. So that attracted a lot of natural liquidity. But the end game is to really work with folks like Chainlink to make this whole ecosystem connect, so institutions do have the depth at which they can actually play. And of course, you really do need that scalability component, that TPS. We're really at the point of like almost early 90s or maybe even late 80s of the internet where the substrate has not been built yet. So hopefully in 3 to 5 years, like maybe Colin C and I will not even be on this call, like it just works, right? People no longer question whether or not they can put through a transaction because of its size or anything like that. But at this point in the game, we do have to work together as an industry. You know, like for instance, Backed and INX need to tell us what they need so they can do their job. But the focus should really be on those guys, like not, how the water flows through the pipes in the deep, deep basement, which is where I think we see ourselves at.
Thanks for wrapping that up there. And now we've got an overview of what we're all doing, what we're all trying to build, and the role we all play in enabling institutional adoption of tokenized assets, which we see moving faster and faster every single month. One thing I want to come back to is particularly about this challenge of data and overcoming the data challenge. So I think I'm actually going to come back to Colin on this. Bringing so many traditional financial assets on-chain means all the data needs to come to. You touched on this.
Yep.
And why is this such a crucial requirement for tokenized assets? And how is Chainlink going to manage to scale this? Because it's almost an incomprehensible amount of data. How are you going to do it?
Well, we're not going to do it alone. That's kind of the first part, right? So you talk about, Colin was just talking about scaling Ethereum, right? We talk about the proliferation of L2s and, getting into L3s, right? There's one of the key issues that we face is the cost of moving all this data on chain, right? And so in these early days, right, it is the early days, and I think we'd all agree it is the early days, we're really focused on figuring out like what are the data points that matter the most, what really moves the needle. Most of what moves the needle today is around collateralized lending, right? And all the different lending protocols that have proliferated cross-chain today. So when you think about utility and you think about Chainlink's kind of place in bringing all this data on chain, it's not about bringing all the world's data on chain just for the sake of bringing that data on chain, right? So there's a lot of collaboration that happens across the ecosystem. When you think about who are the asset managers, who are the treasury managers, groups like INX, right, that are building these platforms and these spaces for trading, what are the data points that the market makers need, the exchanges need, the OTC desks, right? There's all these different considerations for depending on the financial expression that one wants to make, right, or an entity wants to make for the data that they need. I think maybe the way we focus on it now when it comes to real world assets is we think about a lot about the net asset value of a fund, right? And that's a lot of the work that we've done that there's been headlines around with the DTCC and Chainlink specific to SmartNav. And I think there's been a continued proliferation, kind of a continued need for this as we think about the growth of all of the, different kind kind of lending opportunities, and then all the different stable coins, right, that are trying to use different pieces of real world assets as collateral. So when I think about the data problem, right, which is really just a data opportunity, it's probably like anything else, and it's incremental in its nature, in the sense that with the size, depth, and the centralized nature of Chainlink's Oracle networks, I don't think there's a world where more data doesn't come on chain. I think what we're really starting to think about right now is we're starting to see green shoots around the utilization of real world asset and data in a way that, to your point, David, is not it's not just tokens as representation, right? It's tokens that have utilization. And so I think the data that we need is incremental and relative to the use cases that are developing on chain around this. And I think what we're talking about here today, and some of the use cases that Bakkt is exploring with some of the stuff that you're doing, we're beginning to see how we start with NAV and then we can move out the curve into other pieces of data that enable smart contracts and technology to make decisions, right? Programmatic decisions about this information that are decentralized and trustless in a way that you don't, where you start to begin to gain some of the efficiencies and some of the DVP qualities that you would want from using these Web3 or blockchain-based systems that we've all become accustomed to, but we've only really been able to use them with crypto native assets. And so as we start to figure out the use cases a bit more, and again, that's an ecosystem and a team effort, we can start to think about what data we need, when do we need it, and why do we need it? And then I think Chainlink plays a very integral part in how that data moves on chain in a secure and decentralized way, in ways that smart contracts and blockchains can use them.
Yeah, I think you touched on something really interesting there, which leads on nicely to a question for Bob, which is specifically tackling a defined use case. From a trading platform perspective, what sort of data do you need to flow freely? And how does it support like a completely on-chain trading environment like INX has developed?
Mm-hmm. It's a good question. I mean, the data in whichever form it comes or whichever requirement it's satisfying is a structural building block, right, of financial markets. If you look at the various exchanges today and trading platforms, they rely heavily on various intermediaries, and everyone's kind of doing their part in making this whole, trading ecosystem kind of work. And some of those are the data providers, right? So if you look at, take an institutional investor, an asset manager, a family office, it could take days of work to due diligence an investment, right? Something new, something they haven't touched before, or even an existing asset, but from a different jurisdiction or a different issuer. And so the goal is, how do you demonstrate that you doing stuff on chain, disintermediating, leveraging smart contracts and other kinds of data feeds and informational flows to really cut that time down. We need oracles, right, to bring off-chain data on-chain and vice versa. We need third-party auditors to validate that when Bakkt, issues a security and there's a custodian who holds the underlying data, that information, that proof of reserve information is readily available, right? This is something that we want to show on the INX platform. We want to enrich the data available on each asset that is listed and trading on INX. And we want that information available in real time at the point where the investor is evaluating the asset and looking to make that investment, right? And whether this is an automated data feed or a PDF or an abstract or whatever that data structure is going to look like, we need to have that information available. We need rating agencies to come into the space, like we're seeing with the likes of Particular out of Germany, emulating the TradFi rating agency services that everyone has become accustomed to, right? The Moody's and the S&Ps and so on. This is absolutely critical that this information is available, provided by an independent third party and available to investors at the moment where they're making that investment decision. We need real-time valuation and asset performance data, right? Colin just talked about the NAV and the curve, and being able to kind of have a lot of this information prepared, and leveraging the benefit of it all sitting on chain to make it even more transparent and immutable, right? So to say. And there's people who are working on specifically that. If you look at what Invenium partners are doing, that's just kind of specifically what they're working. We need news feeds. We need news. We need our Bloomberg, right? Where we see what the security token market guys, who are providing, as up-to-date, news as possible on the state of the market, on who's making moves, and so on. So, and then ultimately, if we get to, or when we get to that interoperable future, right, where tokens can trade and settle across chains simultaneously, that's also data that has to kind of flow back centrally, right? So there is no double spend, so that as the trading platform, which in INX's case, we actually settle trades on chain, we would have to have real-time immutable data that, trades have settled properly in the event where they're settling across multiple chains. So it is absolutely important, and this is part of what we're constantly working on with the guys on this call, is to get more of this data in a meaningful way, in a consumable way for the average retail Joe out there, but also obviously catering to the institutional clients that we're onboarding as well. So I hope that's a good view of how critical that part is for us.
Yeah, I think you touched on some very interesting points there. I was at Money 2020 recently, and I listened to a panel, and there was a lot of points that I never even considered about how this simplifies back office reporting. Like, for example, if you're an asset manager and you can bake ECG data directly into a tokenized ETF, that just makes reporting in back office operations so much easier. You can quickly add up everything, and it makes more sense. And you can start automating all this stuff with smart contracts. These are things that, the retail users might not necessarily think about, but institutions, they see this as an opportunity to massively simplify their back office operations. So I think we've talked a bit about data, and we don't want to get bogged down too much in the data. There are other exciting things we can talk about when it comes to tokenization of securities and capital markets. And particularly, there's this idea of scale, and how are we going to meet this growing demand for institutional capital? And for this, I think I want to come to Colin Butler from Polygon, and specifically discuss how is Polygon going to enable this scaling and help these new institutions feel comfortable on blockchain rails?
Yeah, at the infrastructure level, that is the key question. It's scale and liquidity. Scale for us is what we call the CDK, the Chain Development Kit, which essentially allows a user to spin up their own blockchain where they control the validator set. This also dovetails into how you get additional institutional adoption, because the banks, for instance, are highly regulated. They're not yet able to interact with public blockchains. So this is really a twofold solution. One, it allows large players that traditionally couldn't come into the blockchain space to play, with the idea that eventually they can get connected to other sources of liquidity outside their own bank. And two, it offers unlimited scalability based on the idea that you can have not just 10 main chains, but basically unlimited. So I think that's the short answer to that question. The longer answer is probably CCIP and Chainlink.
Okay. Yeah, that was good. That was nice and succinct, and you summed that up nicely. So as much as we need to scale the fundamental ledgers that move all of this, we also need to scale the ability to actually tokenize assets quickly and move them on chain at speed. And I want to ask Bernardo about this and how Bakkt is enabling this and the challenges that come with it.
Yeah, of course. So what I think it's really interesting from Bakkt perspective on tokenization is how we are able to deploy tokens or securities on chain that are freely transferable and that can be deployed on DeFi protocols. So that's something quite unique in the space. We have many other players on the tokenization space that have approaches that, because of their own regulatory, frameworks, they need to do some kind of controls on the token level, right? They need to have some kind of whitelisting of who can trade, who can buy, who can sell these tokens. Because of our approach in Europe and the jurisdictions that we actually can deploy securities that on a token form, they are like their assets, right? You, as a user, you can buy these tokens, let's say with us or at INX, for instance, and you can do your self-custody. You can sell to somebody else directly. You can deploy on a lending protocol, use it as collateral, and then borrow, stable coins against this collateral, and then play with DeFi, right? And as this is still in the beginnings, right? Like we're still the very, very early days of this composability with tokenized securities and RWAs on the DeFi space. But I think it's beautiful what we've been doing in that sense, right? Like how we can create this global open capital markets using blockchain as this base layer, right? Because if we think on a globalization trend that has been happening since forever, almost every market, every sector has been globalized somehow, right? You can in Switzerland, use the internet to buy a hotel room in China, right? You can book a flight from Seattle to Tokyo, and you don't need to be in those places. You don't need to go there to the airport counter anymore, right? Like as you used it to do a long time ago. But in the capital markets, you still need, right? Like if you want to access a stock from a different country, or if you want to invest in real estate in a different region, it's usually very hard, and it's usually only suitable for a very specific set of investors, right? And even for them, it's always very complicated, right? So I think this is where we are really beginning to see real adoption, and as Colin and others, I've been in the space for a long time already. But I think now we're in a very good position. I want to tell a very quick story because I think it's kind of it's kind of like on point here. A few weeks ago, I was speaking with a person that works at a very traditional stock exchange, and it's starting to look at tokenization. Comes from a very traditional career in traditional finance, and at first, was still a little resistant from this blockchain stuff, this crypto stuff. Don't want to touch it. And this person works as like a director of custody at a big exchange, and he's beginning to understand blockchain now, right? So I show him INX website. He understands that he's just needs to onboard there. I tell him like this is 15-20 minutes, for retail users, quite quick. And then you need to connect your blockchain wallet, and you can buy NVIDIA tokens. And fun fact, like he works at the stock exchange, but he doesn't have access easily to NVIDIA stocks. It's not easy for him. He doesn't live in the US. He doesn't have a brokerage account in the US. He could maybe access indirectly through ATF or through a fund, but to actually own the stock, it's hard for him. So I think like coming back to utility, the cross-border investment fundraising, it's definitely like the next big driver of adoption. But we're gonna see from DeFi the secondary benefits, right? We're gonna see extra yield. We're gonna see reducing of costs and risk by on real-time risk analysis and collateralization of your whole portfolio, as you can do right now with backed tokens using Chainlink proof of reserve in real time. Chainlink have reading access to our bank accounts where the collaterals are, and you can at any moment, anywhere, you can check if there's collateral for each of the tokens that are created on the blockchain, right? This is comparing to a traditional auditing that you may do, I don't know, maybe once a quarter, having real time, data around that. It's the next step that is obvious, right? So I think this kind of evolution will definitely happen, but in a way that it's on the verge of happening. It's not the promise of the future anymore, right?
If I may just add to that, I mean, we have a responsibility towards these institutions to demonstrate, right, to kind of make their lives easier, because it's very competitive out there. Institutions are scrambling to hire the same smart people that want to be working on the Web3 type shops, right? They want to be innovating, and not everyone wants to go and be a cog in the massive Citigroup machinery, right? And so the institutions are really looking to us as well to keep to kind of prepare in our case, in the INX case, the retail investor, right? So the retail investor, which we focus on very much. You think about fund managers, they want to grow their AUMs. Like, bottom line is they need to go and look for more investors. They need to raise more. If you look at ESG investment commitments for the green future, the types of commitments that many countries have done, you're looking at capital in the trillions that needs to be raised just to deliver that net zero promise. And that's just one angle or vertical of the investment landscape that we're looking at. There is this huge generational wealth transfer that's in progress right now. We all know that. How do you get all of that retail, that huge global retail, investor base, some of whom are in emerging markets and can only part with $100 a month, but they have a dire need to dollarize their net worth because they live in inflationary challenged economies? How do you aggregate, 1 million of those guys? And now with their $100 a month, now you're talking real money. How do you go across the various use cases in these countries, in these jurisdictions, and educate these guys and say, hey, you can build a retirement portfolio with as little as, whatever you can afford a month, and do it on chain. And sometimes you're bridging the gap for these guys who have never used a wealth management platform, and you're going straight to crypto rails because they're already comfortable with crypto rails. So from the INX point of view, we've got this whole educational responsibility, identifying the right markets, identifying the right investments for those markets, and then kind of onboarding them onto the platform. And that's kind of facing the retail. And once you do that better and better, now you have institutions paying attention, because you could raise a good couple of million from retail, and they want you to kind of be in between there and kind of solve for the problem. So suddenly the large fund manager doesn't have to have 1 million names on its cap table, right? Of all kinds of people all over the world. So we definitely see ourselves kind of in that critical midpoint, sort of between the vast retail investor audience out there and the institutions. And when we face the institutions, we also have to be careful not to bore them with blockchain-y, techie, language at times, and kind of simplify things and say, this is a mechanism that is regulatory compliant, it's secure for how you can distribute your products into large audiences globally without going into too much of the techie stuff. So we definitely have to finesse the way we talk about this stuff, the way we present it to these institutions and so on, and really educate the retail as well. So I think that's an important part of the puzzle.
Yeah, I think you touched on some very interesting points there about how bringing retail and getting them more involved will undoubtedly bring the attention of institutions, and we're already seeing this happen within blockchain. There's this argument I've heard a lot that retail users, younger retail users, will probably, a lot of them will be more familiar with a centralized exchange rather than a brokerage account. And if that's the case, why would they want to change? Why not be comfortable where they are? Okay. So I think I want to move on a little bit, and we've discussed how we're making retail and institutions more comfortable. But what are we doing to actually adapt for institutions and tokenized assets? So what solutions are we specifically making for institution to make institutional adoption a reality that moves quickly? And I think I'll come back to Colin Cunningham for this one. 2 Collins in the call makes my life so difficult, guys. Change your names. So I know Chainlink is working very hard on CCIP, and I want to figure out why you think this is so important for the convergence of Web3 and TradFi.
Sure. So I think there's, from an interoperability perspective, I think there's kind of 2 things that have happened, and maybe, I don't want to say people have gotten wrong, but maybe thinking's evolved pretty considerably over the last 4 to 5 years, right? I think, or maybe the last 10, if you look at crypto more broadly. I think on the crypto side, right, because of kind of the crypto maxi mentality, the benefits that we've all seen from being in Web3 and kind of the composability, the decentralized nature of what we build, and just a lot of honestly, things that we kind of take for granted in the on-chain ecosystems by the way these technologies perform and what we expect once we have our money and certain assets on chain. I think we, at sometimes, especially depending on which project you work on, we just kind of lost track to the fact that TradFi has built their own financial technology systems for the last 30, 40, or 50 years. And they've invested tens, if not hundreds, if not billions of dollars into these systems. It would be one thing if those systems were just systems at kind of an individual basis, or systems that just served a specific financial firm or function. But in fact, these pieces of technology, right, had to not only be built within firms, they had to be built across industries, and then they had to be built in a way that they would fit into different jurisdictions' compliance and regulatory standards, right? And so when you think about all of that technical debt that exists outside of Web3 in the world that we've all built over the last 15 years and continue to build, there's a massive dislocation between the way Web3 systems perform on-chain and the investment in the technology and the standards that have been built in Web2. I think once you acknowledge that, you understand the power and the importance of interoperability. Now, the other thing that I think has happened, and this is where I think we've seen a lot of the TradFi thinking kind of emerge and mature, is that we started out in a world, I'll loosely categorize it as, we'll build, I think the TradFi mentality originally was probably, we'll build our own blockchains, we'll use the technology for what it is, but we're going to use blockchains and this distributed ledger technology for the purposes that we need see fit within our existing Web2 infrastructure. I think some of that, there are benefits to private blockchains, but I think we're seeing a seismic shift in the way people think about public blockchains, and the benefits of blockchain-based systems and Web3 writ large kind of require that we find secure, compliant ways to interact in these public ecosystems in a way that honors the off-chain kind of regulatory and compliance standards that have been built over the last 50 years around the existing Web2 tech stacks that exist. So where Chainlink really thinks a ton about this is, I think from an interoperability perspective, when people hear cross-chain or interoperability, we typically go just to Web3. But when I think about the massive opportunity that we have in front of us, it's really about how do we blend these two worlds, and specifically, how do we begin to build Web3 technology and infrastructure in the most secure way, and then fit that into, it's a little bit of a square peg round hole process, into the existing Web2 tech infrastructures that exist for all the different financial institutions and firms that exist around the world, across the different jurisdictions, and bring them safely and securely into the world that we all know and love, and kind of upgrade the experience for everyone. That is where, when you look at interoperability and you think about where things sit today, I think those are kind of the two big narratives that are most important. One is that Web3 is understanding that we can't do it alone, and the systems that we've built will not exist, cannot thrive at scale, right? We won't see the world's assets come here without that shift. And I think two is TradFi going, what we've built is what we've built, but we have to find a way, in a way that's secure, to interact within these public and these open systems that exist in the Web3 world, to really unleash or to capture the benefits of the ecosystem that's being built there. I think that's a really great place for everyone to be on both sides of the aisle.
Thanks, Colin. I think you that was excellently put, I would say. So thanks very much for.
I've said it a couple of times on a couple of calls, in a couple of meetings, on a couple of stages. Yeah. So, yeah.
Well, if it wasn't perfect, there would be a problem. So I'm glad it was. Okay, well, I think we've covered a lot. This has already been a 50-minute call, and we've touched on some really heavy stuff. So I don't want this to drag on forever. We're going to do more of these. We're going to continue deep dives into what we're all doing to push tokenization infrastructure. And I just really want to give a final opportunity. If there was anything we've not quite touched on yet, or we've not quite managed to segue into, I'll try my best, but I'm not perfect. From any of you guys, I just want to open the floor and see if anyone wants to touch on anything that we just covered. Or are we good?
I would just say because I've been doing this with the hat on that this is institutionally oriented, although I know the entire INX community is tuned in and listening to this. So our retail guys are on here. But I think the message that I want to leave here, specifically to the institutional players out there who are looking at what we're doing, is from the INX point of view, we're preparing the retail investor in over 85 countries where we are able to onboard from, to invest in blockchain native assets. And these guys are just as hungry for yield bearing assets and dollarization of their net worth, like I said. So we're able to offer retail investors self-custody, 24/7 trading. So literally, as of this relationship with Bakkt, an investor in Nigeria could, on a Sunday, on-ramp to INX using crypto within less than 4 minutes, and they could buy NVIDIA shares on a Sunday ahead of the open the following day, because something is broken in the news and they think there's an opportunity here. And the opposite works as well. People can exit positions 24/7 in these emerging markets or anywhere else. And we're offering these fractionalized shares. So the message here to the institutions is, let's get these yield-bearing assets, whether it's tokenized bonds, money market funds, or the REITs, tokenized REITs. Let's get them onto secondary trading venues like INX, and let's get these investors to come in because they want the yield, and let's build the liquidity rather than sitting back and saying, let's see what these Web3 guys are going to do, and we'll step in. This is a time where we have the regulation. I describe our relationship with Bakkt as a beautiful marriage of US and European regulation. And it's something we're proud to showcase. So I really welcome any institutions that want to really explore and not just talk fluff, to get in touch with us here and see how advanced we're getting with what we're building.
Thanks, Bob. Yeah, I think that's put it nicely. I recently wrote a little quote in an article talking about Goldman Sachs tokenization project, basically saying tokenization is no longer something that we've dreamt about in the future. It is happening now. The question is, how are the Web3 players going to help shape it? How are we going to make sure that it is interoperable, it is accessible, it is helping emerging markets, as opposed to it all existing on private blockchains and we all have the same problems we had right now. And I think us all working together from the chain level to the data level to the trading level to the asset issuer level, this is how we push this forward. And yeah, we've had some excellent questions, which sadly I don't think we're going to get to because we're already really pushing the time. However, I'm going to answer them all afterwards in DM, so don't worry. But yeah, I just wanted to say thank you all for coming along. And I'm really excited to see you guys all again and do the next one.
And thank you, David, for being an excellent
Thank you.
host.
Yeah, amazing. Great work, David. Thank you guys, Colin, Bob, Colin.
Thanks for having us. This was great.
Colin, Bernardo, and Bob. We've got 2 B's and 2 C's. It made the alphabetical order really difficult. And thanks everyone for tuning in the first time we've done something like this. More of a deep dive for the institutional minded, the TradFi minded, trying to get across what we're all trying to build together. So that's all from us. We're going to tap out now and get back to work and get back to building the future of capital markets. Okay.
Amazing.
See you later all.
Cheers, everyone.
Bye.